We've all heard people debate the best way to manage money, cash or credit. Some people swear by cash to stay on budget, while others rely on credit cards for rewards and convenience. But which one actually helps you manage your finances better? And more importantly, which one might be secretly draining your budget? Today we'll break down the pros and cons of both, so you can decide the best approach for your spending habits. Cash is straightforward. You can only spend what you have on hand. It's tangible and easy to keep track of, but it lacks the rewards and protections that credit offers. Credit cards offer convenience, rewards, and sometimes protection on purchases. But they can also make it easy to overspend, which can lead to debt if not managed carefully. In this video, we'll look at how each option impacts budgeting, spending, and overall financial health. By the end, you'll know which approach might be hurting your budget and how to use both effectively. When you're paying with cash, you're limited by the physical money you have, which naturally sets boundaries on your spending. Once your wallet's empty, you're done spending until you get more. Spending cash is a physical transaction, which tends to make people more conscious about what they're buying. Studies show that people spend less when they use cash because it feels more real. Using cash gives you instant feedback on your budget. You can see exactly how much you have left for the month or week without checking an account balance or calculating interest. Try the envelope method, where you set aside cash in labeled envelopes for different categories, like groceries, entertainment, and dining out. Once the cash is gone from each envelope, that's it for the month. Cash transactions don't offer cashback, points, or miles. If you're not using credit responsibly, this might not be a big loss, but for frequent travelers or shoppers, missing out on rewards can be a disadvantage. Cash is harder to track if it's lost or stolen. With credit, you can usually dispute fraudulent transactions, but if you lose cash, it's gone. In today's digital world, cash can be inconvenient, especially for online shopping or recurring expenses like subscriptions. Carrying large amounts of cash can also be risky. Use cash for certain in-person purchases, but keep a small amount at hand. Reserve online transactions and recurring payments for secure methods like debit or credit cards to keep things manageable. Benefits of using credit include convenience, wide acceptance, and usefulness for both in-person and online transactions. They also make it easy to keep a record of your spending, which can be helpful for budgeting. Many credit cards offer rewards like cashback, travel miles, or points that can be redeemed for various benefits. Some also offer perks like extended warranties, purchase protection, and travel insurance. Using a credit card responsibly can help build your credit score, which is crucial for major purchases like a car or home. A good credit score can mean better interest rates and loan terms in the future. If you use a credit card, pay off the balance in full each month to avoid interest charges. This way, you can take advantage of rewards without accumulating debt. Downsides of using credit include the risk of overspending, since credit cards give you access to funds you don't actually have. It's easy to swipe now and think about the bill later, which can hurt your budget in the long run. If you don't pay off your balance in full each month, interest charges can quickly add up. Credit card interest rates are often high, which can make even small purchases costly if carried over time. When used irresponsibly, credit cards can lead to a debt cycle where you're paying more in interest than the actual purchases. This can make it harder to save or invest, impacting long-term financial health. Set a personal credit limit that's below your actual card limit to avoid the temptation to overspend. For example, if your card limit is $2,000, set a personal limit of $500 and stick to it. Comparing cash and credit for budgeting, cash helps you stay disciplined since you're physically limited to what you have. For people who tend to overspend, cash can be a valuable tool for staying within a set budget. While credit cards can make it easier to overspend, they're not always a bad choice for budgeting. If you track every transaction and pay off the balance regularly, credit can help you budget effectively. Plus, credit cards often come with spending summaries, which help in tracking where your money goes. People who struggle with discipline might find cash better for budgeting, while those who have a strong handle on spending might benefit from using credit. Surprisingly, cash can hurt your budget if it's not tracked properly. With no record of transactions, cash spending can sometimes lead to mystery expenses where you're unsure where all your money went. Many people find that small, frequent cash purchases, like coffee, snacks, or small shopping trips, add up quickly without them realizing it. This can create leaks in the budget that aren't immediately obvious. Track every cash transaction in a budgeting app or a simple notebook. This way, even cash spending is accounted for, making it easier to see where your money is going. When credit might be killing your budget. Credit cards can quickly drain your budget if you're not careful. Overspending and accumulating interest charges are two of the biggest pitfalls that can put a dent in your finances. Let's say you have a habit of charging small purchases to your card, thinking they're no big deal, but at the end of the month, they add up to hundreds of dollars. If you don't pay the full balance, you're charged interest, making those small purchases even more costly. Set up alerts on your phone for credit card transactions, or use a budgeting app that shows your remaining balance. Review your statement weekly to avoid surprises. How to decide which is best for you. Assess your spending habits. Are you more likely to spend impulsively? If so, cash might be the better option, as it limits you to what's in your wallet. On the other hand, if you can manage impulse buys and pay off balances each month, credit can offer rewards and added convenience. Try a cash for every day, credit for big purchases approach. Some people find it helpful to use cash for smaller everyday expenses like groceries or coffee, and credit for larger planned purchases. This way, you get the benefits of both without overspending. Revisit your budget regularly. Whether you prefer cash or credit, keep a close eye on your budget to ensure you're not overspending. Adjust as needed based on what's working for you. Final verdict: cash, credit, or both. Often the best approach is a combination of both, using cash for in-person, day-to-day expenses, and credit for online purchases, travel, or big expenses where rewards and protection are valuable. Ultimately, the decision comes down to which method helps you stick to your budget and reach your financial goals without causing unnecessary stress. Try using only cash for a month, and then only credit for a month. See how each affects your spending and budgeting habits, and then choose what feels most effective. Choosing between cash and credit is a personal decision that depends on your spending habits and financial goals. Both options have their pros and cons, and the key is to find a balance that works best for you. If you're struggling to stick to a budget, consider experimenting with both methods and see which one helps you stay on track. Don't let your payment method control your finances. Take control, stay mindful, and make choices that support your financial well-being. Thanks for watching, and let me know in the comments. Are you Team Cash or Team Credit? If you enjoyed this video, don't forget to subscribe and turn on the notification bell. We upload 3 videos every week and help you on your personal finance journey.